Good evening, wherever you're watching me from. Here's someone just YK again. So today, just like I've promised you guys before, that I'm gonna drop my trading plan for 2025, but because of my busy schedule, I've not been able to drop it. So today, I just decide to drop my trading plan for this year, which I want to believe that every one of you, you're already cashing out big. Today is the 25th of January, 2025. If you check our signal for last week, let me just try to share that. If you check our signal for last week, yeah, if you check out my weekly outlook that I dropped last week, you can see that the market actually hit our target, which was this from here to here, which we're able to book about 1,210 pips. So this is our take profit level and the market hits the zone. So I'm gonna drop another one tomorrow for what you guys should be expecting next week. So today is not for our weekly outlook and all that. So today I'm going to share my trading plan for 2022 with you guys. So if you observe what we dropped last week as weekly outlook, you can see that I call it Trump effect. If you missed that video, go to my YouTube channel and check it out. You can see that the market actually reacted according to what we analyzed, and we're able to book about 1,200 pips. So right now, today's video, I just wanted to share my trading plan for 2025 with you guys. How I'll be reacting to the market and what are the things I'll be doing. Yeah. So number one, you can see these are my trading plan for 2025 US30. Okay. These are my entry confluences. That is what I'm going to see before I can take any action on the market. Before I can take any action on the market, those are the stuff I need to see. And the first one says psychological level. I want to believe that every one of you knows how to draw psychological level. In case you don't know, let me just try to do something. Let me see if I can use some tools. Yeah, for psychological level, it's just an horizontal line like this, which is an interval of 100 pips, just like this, like this, like this. I'm sure many of you will have seen my chart, and it's interval of 100 pips. Let's say this one is 40,000. Okay. Let's say this is 4,000. This one will be what? Because we are coming down 39,900. 3,009, I mean 900. 900. Then this will be 3,800. And this will be what? 3,700. And if we have another one up here, it will be what? 4,100. So this is an interval of 100 pips. This is a pips, 100 pips interval. So this is what I call psychological level. This is psychological level. So market must be on psychological level before I'm going to take a trade. That is one of my confluences for this year. Moving forward, number two sales. Let's take it out. Let's delete that and take it out. So I hope everyone understand that, right? So now that's the first one, which says psychological level. Then the second one is trend line. I believe every one of you knows about trend line, which is just a line you draw, which is going to connect at least, let's say, let's say we have a chart like this. Everybody knows what trend line is. But in case of, for the benefit of newbies that are watching my video, let's say we have a chart like this, like this, like this. These are not uptrend, right? Everybody knows we have uptrend, we have downtrend. So a line that you draw that will connect at least two zones, at least 2 points together. That's not proper. Let's say we draw it like this. 2, 3. You can see this is point number 1, this point number 2, this point number 3, and this 4. This is a trend line because if you have at least 2, let's say we have it like this, and it's connecting this and this. We have this, we have this. This is a valid trend line also. So this is number 2. Market must come to the trend line before what? I can take a trade. Just like what happened 2 weeks ago. If you watch my weekly outlook for 2 weeks ago, I said it, the market was actually on the top touch of the trend line, where I say the market is going to react massively to push it up, or if there is a breakout, then we'll take it down. Then what happened? The market reacted to on the top touch and pushes the market up, and then from there we have massive move, which we've presently the market is over 2,000 pips from that. It's presently over 2,000 pips from that particular point. So moving forward, number 3. Number 3 says chart pattern or candlestick formation. Everybody knows about chart pattern and candlestick formation, but in case you don't know, on my Telegram, there is a book I actually dropped there, which is called Candlestick Pattern. Maybe you have engulfing candle, morning star, evening stars, hammer, inverted hammer, and the rest of it. There are some things I need to see on that before I can what? React positively. I said, chart patterns and all the candlestick. So the fourth one here is CNBC. I believe everybody knows about CNBC, but in case you don't know, maybe you are new on my channel, just watch some of my old video whereby I explain everything about CNBC. See, it's not necessary that you come for my mentorship before you can take a trade. You can be on this my free channel and then you can still be making money because I have so many free content I've actually dropped on my YouTube channel, which can actually help you guys. There's a video I dropped about CNBC where I break everything down. Everything you need to see on CNBC, where I break it down. The only difference between my mentees and you that you're watching this video is most of my mentees, I mean, all my mentees, they know when I enter the market and they know when I leave the trade. And sometimes we do live trading together. Like my mentees, what they do is every day, they trade live together every day, New York section, at least 1 hour every day. And sometimes I join them if I'm chance, and if I'm not chance, they make money together. That's the only thing. Because Forest is just like a community. It's a group of knowledge that you cannot know it all. I cannot know it all. So you might be seeing something and I might not be saying it. No, but when we are trading together, you'll be able to see some certain things. The confidence will come, on how to react to the market and all that. I hope you get that. So that's just the only difference between my mentees and you that you're watching this video. So it's not important for you. It's not necessary and it's not compulsory that until you have that money before you can join my mentorship. No. You understand what I mean, right? So I just decided that this year I want to help as many people as possible. Either you appreciate it or not, it's not my concern. So far, I know I'm doing the right thing, and I know I'm trying all my possible best to carry as many people as possible along, in case you chose to be a trader. So that's just it. And moving forward, the next one is Fibonacci, Fib. So I have this also on my channel, which I'm sharing a whiteboard here, so I cannot bring out the Fibonacci. But on my weekly outlook, you're gonna see it. I'll drop another one tomorrow. Okay, so I said note. I only take trade when I see at least 3 of these conferences. That is when 3, but the most important one is this CNBC. Okay. Once I see CNBC that is telling me either to buy or to sell, Then I check out for two among this also. If I see at least three, I'm going to enter the trade. Sometimes I might see the whole five, just like this week trade. It's 100. In fact, this week trade, I was so confident to the extent that I was posting it everywhere and I was telling people, enter the market, hold the trade. I had my trade from Monday to Thursday. I actually closed out about 90% on Wednesday. Then on Thursday, I closed out the rest. That is when you have the proper understanding of the market and your IQ is very, very solid about the market. Now, moving forward, risk management. I said, because I don't want this video to be too long, I don't want it to be too long, so I'm just gonna move a bit faster now because I've talked about the conferences already. So this one says risk management. Early entry 0.5 of my 0.5% of my account, then I split it into four. That is to say, if I see my confluences at least three, I'm gonna enter at least 0.5% of how much I'm gonna risk. I call it first leg just for testing if you want to test the water. So I enter that trade. So once I enter, then I keep watching. And if the market, you don't just expect, sometimes you might enter a trade and you have a drawdown before the market will actually react to what you want. And when I see that, okay, I have a drawdown, and then I see the candle I want, that the market is ready to react to what I want, I put in another leg. And when the market is moving up, then I put in two more legs, making four, right? Making four, that's what I mean there, making four. And once I have about 100 pips, I break even straight. Either from 70 to 100 pips, I break even. And mind you, I don't take, okay, we're going to see it. Then it says, when in profit, I break even and start stacking up to 1%. That's what I just explained now. And everything will maintain the same stop loss, the same stop loss. Then I say, when I double my account, I take out my capital and start risking the profit. Yeah, let's say, for instance, now I deposited $1,000. Once I'm able to move that $1,000 to $2,000, I remove my 1,000. I save it back to my bank, then I start risking the 1,000, which is my profit. Then if I'm risking that 1,000 now, I will now trade it without emotion. And before you know it, when you're trading without emotion, that's why we advise people not to trade with money you're not ready to lose. And when I'm trading without emotion, trust me, that is when the jackpot, that is when the game changer comes. Because before you know it, you take some certain risk that you don't expect and you're going to make more. Do you understand? So that's it. Moving forward to daily loss limit. Risk 50 to 100 pips SL for all trade. Then the second one says risk to reward at least 1 to 3. If I see any trade that is below 1 to 3 risk to reward, I will not take it. If the risk to reward is just 1 to 2 or 1 to 1, I will not go near it. But if I see a trade that will give me at least 300 pips, I'm going to take it. Or I see a trade that will give me at least 200 pips and I can risk 50 pips to get 200 pips, I can take it. Do you understand that part? Moving forward, I say daily loss limit, maximum loss 2% of my account. And I say 2% of my account and I take trade once or twice per day. I trade only New York section. Do you understand this now? That is the maximum loss limit I can risk on my account is 2% per day. And I trade only New York section. That is, I trade only New York. I don't trade London because I'm based on US30 and it is always very volatile during New York section. Do you understand that? Now, he said I'd break even rules. I move my stop loss to break even or minimize my stop loss to a point where I think the market cannot come close psychologically. Well, there are some points when market is going up and then there is a retracement, there is a weak, you will know psychologically that even if the market wants to drop down, except you have a change of character that want to change the trend of the market, you will know psychologically that the market cannot get to a certain point. Then I move my stop loss to that particular area. Do you understand that? If you want to experiment this more, you can decide to join my team. So that's just it. And this one says, don't predict the market. Let the market come to my point of entry. If it didn't meet up with my criteria, I will leave the trade. There's always another opportunity in the market. Yeah, very well. Now, what this one is saying is, don't run after the market. Let the market always come to you. Let the market come to your zone. I'm sure there is a key level you've marked out. You have some key levels. Let the market come to your zone, to your key level. Before you do what? Before you react to the market. I think there's something that is missing here. Key levels. Yeah, it's missing here. On my entry, I have key levels. Yeah, key levels. Very important also. Key levels. My key levels are very important. Then the last one says, never add to a losing trade. When you see that you are in a drawdown, don't add to a losing trade. Don't add to a losing trade. Please, and please, never add to a losing trade. Now, these are my exit strategy. When I see rejection candle, I will exit the market and close for the day. My exit strategy is when I see multiple weak rejection at a particular zone or a particular psychological level or a particular area, then I look towards my left and see that, okay, these are the things that has happened in the past. This is why the market is reacting like this. Then I do what? I exit the market. So that's my exit strategy. And he said, note, I will always trade with stop loss and take profit. That is to say, if I want to enter a trade, I will never trade without putting stop loss. If you are trading without using stop loss, then you should be ready to lose that account. Never trade without a stop loss. Very important. And then it says, I will never trade more than New York section. Yeah, because I trade only US30, so I will never trade London because the market does not move during London. There's no volatility in the market. But during New York section, which is I enter my trade around 3:30 p.m. GMT plus 5, plus 1, 3:30 GMT plus 1, which is 5:30 p.m. in Qatar. That is when I enter my trade. You understand? Then it say I trade only US30. Yeah. So this is all my trading plan for 2025. This is how I'll be reacting to the market. Oh, my advice to you guys is, just like I said before, try to step up that risk this year. You need to take more risk. If you are so scared of taking risk, my dear, you're going to be in that same position. Trust me. Your 0.01 cannot buy you that dream car or that dream house. You need to step up the game. You need to step up the game. Yeah. Proprietary firm are helping a whole lot of people. I don't have any partnership with any proprietary firm, and I don't have any business with any proprietary firm. But what I can recommend right now is Funded Nest and FTMO. I still prefer Funded Nest more because FTMO is very good, but there are some hidden things that you guys don't know, which it's none of my business, but you can just go to Trustpilot if you want to check more about that and see what people are saying. Okay, Funded Nest also have theirs. Okay, none of them is exception. Funded Nest also have theirs, but if you're talking about flexibility, I think I will go for Funded Nest more. So that's just it. And then what else again? And if you're trading a personal account, please and please trade with money you're ready to risk. Don't trade with money you're not ready to lose. Don't go and trade with your house rent too. Don't go and trade with your school fees too, because you will not, don't let me say you might lose the money because nothing is certain. We are just taking risk. You understand that? All right, guys. So this is where I'm gonna stop for today. Till I come your way again, this is someone Jason YK. The link to all my the broker I use, I have XNESS, I have FBS. Now I'm trying to check out one, which I'm not going to talk about them now, but the link to any of them that I use is going to be under the description of this video. If you want to join my team, I don't do account management. I don't manage fund for anybody. If you want to join any of my team, comment down below. The link to my channel is going to be here. Just click on it. It will take you to any of my channel and you can chat me from there. If you want to do anything with me at all, make sure you hear my voice. Make sure you hear my voice before taking any action. All right, guys, till I come your way again, this one was Jason YK, guys. Signing out and peace out. Bye for now. Tell me what's wrong.